lots of interesting commentary coming in from US Energy Secretary. Let's watch out for that. But along with that, let me also welcome Arvind Sanger on the show. Hi, Arvind. Morning and great to be speaking with you. Lots been happening back home, but specifically, let's start with the US markets. They are seen to be in a bit of a correction mode of late. Some of these IT majors are also seen to be making a U-turn. What do you make of the markets? Because the markets are now looking forward to a rate cut cycle. Along with that, it's the US GDP data that the markets are waiting out for. How do you see the setup?
Well, I think that the main thing to keep in mind is that the US market has had a huge run. And taking a little bit of a breather here, is neither here nor there. It's not really meaningful. I think the clear optimism is that Fed has embarked on next leg of its rate cutting cycle, which had been on pause for a few quarters, and that there will be more to come. But it's not a slam dunk, as Chairman Powell has been at great pains to explain that they are caught between two competing and opposite forces, one of which is slowing labor employment, and the other one is persistently higher inflation than they would like it to be. It's closer to 3 rather than being closer to 2. And therefore, they have to judge which risk is higher. And the last 25 basis point rate cut was to protect against the labor market getting much worse. But I think it's going to be meeting by meeting. I still expect one more cut. I'm not sure if we'll get 2 more, but I think the market is a little nervous about whether it can keep rallying, given some of these uncertainties on the Fed front.
Right. So, Arvind, what's in it for investors right now, both who are looking at the US markets and here in India?
Well, the US market has been on a tear led by AI. And every day we get new news about who is spending how many tens or hundreds of billions of dollars on new expenditure on data centers, on buying chips from Nvidia. And today it was from China, Alibaba announcing about major new investments in AI. So clearly that seems to be the single biggest theme that is driving the US markets. And frankly, it's also the single biggest theme. The whole AI theme is the single biggest theme driving the Chinese market. So, you have 2 of the major markets, very much AI driven. And the risk that you have is that when you have such an over dependence on one sector to drive a huge part of the growth, then any kind of a pause, any slight negative data point can cause profit taking. Again, I don't believe the AI cycle is going to come crashing down or that it's going to prove to be a disappointment tomorrow. It is possible that all this investment will not quite deliver the returns that the bulls are hoping, but I don't think that's an imminent risk. So I think there's more of a trading volatility rather than any fundamental wheels coming off unless something goes badly wrong in the economy. And so far, one of the surprises has been that the US economy has weathered all of the tariff, cost pressures and everything else without much of an effect on the economy. So I think that from an investor standpoint, it's still, AI-led GDP growth and economic fundamentals that seem to be doing reasonably well.
Hi, morning. We were just tracking some important global commentary this morning, and you've had word coming in from Jerome Powell where he says US equities look slightly overvalued. Other than these recent cuts that we've seen on the market, all seems to be going well over there. Like you've said, lots of AI-led investment also happening. On the flip side, we also have comments coming in on India's relation once again with Russia. Help us understand how this handover coming in from the US could pan out for the Indian markets back home and what could happen in terms of this entire oil trade rhetoric.
Well, so let's talk about Jerome Powell's comments about markets being a little overvalued. If you'll remember, famously, Greenspan in 1996 talked about irrational exuberance, and 3 or 4 years after that, the market went straight up when we had the dot-com bubble. So the ability of Fed chairman to comment on market and having that effect, any effect on the market, is demonstrably, irrelevant. If the market chooses to go up, it'll go up with or without Jerome Powell thinking it's undervalued or overvalued. Now, as far as energy demand that's being driven, oil prices are staying reasonably well behaved. So, energy demand is strong, but commodity prices, oil is not running away. Of course, gold is very strong. Copper had a big move. But I think, therefore, if you're talking about handoffs, I think the commodity side of the equation with things like copper are benefiting. When it comes to India, I think the single biggest remaining concern for us remains lack of a deal with the US as a short-term overhang. I think the medium-term issue is India's own economy. I think we've seen some good moves by the government, first rationalizing GST, secondly announcing some CapEx moves recently to try to jumpstart the economy. So the Indian government is making some sensible, needed moves, but I think with the headwinds on the AI front and now on the H-1B front hitting at least moderately the tech sector, and with the tariffs hitting the manufacturing, some of the exporters, I think the government needs to do more, but certainly getting a deal done with the US to get tariffs back to more reasonable levels would be helpful. So I think the Indian market is in a bit of a holding pattern. It creates buying opportunities, but I don't think the market's going to run away until some of these clouds get lifted.
Okay, Arvind, great to have you on the show. Thanks as always for joining in with your thoughts. Let's just revisit what the pre-open rate for the Nifty is looking like.